Let's get into Japan's master plan. And today is going to be a good one because we will have a special guest. Yat Siu will be joining us here soon from Animoca Brands. But I wanted to kind of remind you guys that we did a video earlier in the week that was one that I think gets into a little bit of detail of what's happening in the market in general. The only difference is that during this video, we didn't really touch on this topic. We wanted to reserve it for this one today. So today we'll be breaking it all down for you to dive into that. One of the things also, if you kind of consider where the market is going, both with Japan and the strategies that they've been doing over the last several months, what we're seeing now is a little bit of more of a cohesive effort. An example would be this tweet right here, which of course is Japan's Satsuki Katayama, now supporting crypto integrations across traditional markets. This is a pretty big deal because, as you'll remember, the Japanese prime minister have also kind of gone all in on where crypto is going, but more likely, or more importantly, it's very tied into what's going on with some key companies. One of those key companies, of course, is Sonium, and there's Soda talking about Japan's first banked yen-based stablecoin. This will be available in June of this year. Very key points that I want to hit on here because there's a lot of dates that will coordinate up through Q1 and through Q2 of this year around all of this stuff. And of course, with that, you've also got some things happening in general around tokenized stocks. And just to give an example of this, let me show you stocks, all right? Coming soon. That's something that I think will continue to indicate where we are going in a tokenized world. The Japanese market seems to be leading it. So it's going to be a good one to get into today with Yat Siu. And I want to bring on Yat Siu of Animoca Brands. You guys have seen him on the show many times. Yat Siu, how are you?
Very good. Thank you for having me on the show again, and Happy New Year, everyone.
Yeah, it's a good one. So Yat Siu, I wanted to lead off today's episode with you with some breaking news from CES. And this was specific to Sony and Honda. I want to go to that clip because this is an interesting play. Take a look.
We're bringing remote play to cars for the first time. This is the console in the car. We are crafting a unique audio-visual interactive experience that will appeal to gaming fans.
This includes in-vehicle apps and the rich cluster. To further accelerate open co-creation with creators, we are building an on-chain mobility service platform driven by crypto technology and a token-based incentive model. This platform will be able to not only to Sony Honda mobility, but also to other automotive OEMs and service providers. This enables developers to create entirely new mobility applications that will further transform the in-cabin experience.
All right, so Yat Siu, a lot of things coming now to our cars of the future. Tesla, of course, we've seen move in this direction, but not to this scale. Honda's making a big step with Sony. What do you make of this? Is this something big or not?
I think it's big. I think one of the things that you find interesting about Japan versus the rest of the world is that Japan's sort of crypto innovation, and particularly when it comes to digital assets and blockchain technology, is very enterprise driven, as in it's coming quite top down versus many other places where it tends to have come more bottom up, meaning that you've got enterprises like Sony or even the banks, or you've got like, in this case, Honda, right, all integrating that tech. When you think about sort of the longer term, how many people are actually going to be driving their cars, right? Mm-hmm. I mean, right now in the short term, it kind of looks like, oh, okay, sure. I mean, why would I do that? And it could be a safety issue. But actually, in the not so distant future, I mean, as we have seen already, cars are going to be completely self-driving. And so if you're self-driving and that's all okay, then what are you going to be doing sitting in your commute, especially in places like America, where you could literally be commuting to work for 1 or 2 hours, 3 hours in some cases, right? Instead of basically sitting on a train, you basically just take the car to go you there. And you want to get the car that probably has the best XR experience in some form, or that has the best sort of, visual audio experience that you're sitting there. I mean, we have to imagine that the future car isn't going to be just the enjoyment of riding. The idea of comfort is, very different than it was before. And the parallel to me is, what was our idea of the perfect living room 30, 40 years ago is very different than what it is today, or when it was even 20 years ago, right? Every living room has a big TV now, right? That has got incredible audio experiences with like a console that you can play at any time, for instance. And that's actually what you expect. And transporting that living room experience into essentially a mobile living room, if you will, is probably the car of the future. So I think it's pretty smart. What I think is really interesting is the integration of essentially blockchain, and specifically mentioning crypto technology, which of course is blockchain based and tokenization, as that next frontier. So very exciting.
Well, the fact that you've got two of Japan's titans, which of course is Sony and Honda, coordinating on this, and the fact that they are all in, along with what seems to be the government of Japan also looking at tokenization becoming a next generation technology and framework, maybe even societal shift. I would agree with you. You add this along with some of the tech that's coming out in these cars, it'll be interesting if they can rival some of the things coming out of China, for sure.
Well, I think it's also going to push the rest of the world as well, right? I mean, because this technology is going to start coming into basically the global sphere. We shouldn't forget that the largest distributors and creators of cars effectively still Japan, right? You know, I mean, you know, whether it's Toyota, Honda, Nissan, whichever. And so that technology basically going to the rest of the world and integrating, which is kind of one of our sort of initial predictions for the near to midterm, which is that a lot of the trends that we're going to see in blockchain technology is where blockchain is basically on the back end and you don't really get to see it. And I think we're entering the phase where we no longer talk about, you know, it's early stages, but we're entering the phase where, just like how we don't talk about MP3s anymore, we just call it music. We're entering a phase where blockchain technology is sitting on the back and is doing all the cool things that you can only do through blockchain, but the end user may not even care what that is. It's just sort of this sort of very seamless integration.
Speaking of that, at CES, XREAL released two new devices, which were interesting to me in the sense that they were, one, very cost competitive. I think one of the things they had actually dropped the price on for some of what XREAL was doing before Project Aura. And I want to share this with you because this was the Project Aura that they, of course, have dropped. This is coming on Android. I want to go to a clip because this is XREAL and Asus doing their announcement. This is where I think it starts to connect the dots. Take a look. To me, that's pretty sexy. I mean, think about that. I think Meta and Apple are shaking in their boots right now because that interface, the size of it, and also just the way that it interfaces into Asus, which is ROG, one of the biggest gaming platforms out there. Do you feel like this is going to get the uptake that we've seen on social and mobile in general?
If you look historically between whether it's console adoption or whether it's essentially this kind of sort of late generation hardware, sort of gaming tends to be one of the key drivers around that. And it's that core audience that wants to essentially get the better, more efficient, more sexy, you know, more whatever experience that they can drive out of it, right? At the end of the day, you know, we should be reminded of the fact that NVIDIA wouldn't have been here today if it wasn't for all the gamers out there who said, I need to play a Call of Duty better than I did before, right? So I'm going to go and basically buy a more expensive graphic card. And it's kind of fascinating when you think about it, that we ended up sort of funding what ultimately became the world's AI engine, which of course is transformational from a very different way, but it happened through gaming and entertainment because we demanded essentially a better experience. Right. And, you know, I've been involved in this space where, you know, back in the days when we were working on VRML in the 90s, trying to sort of make that a reality in some form or the other. And the challenge was that it was simply not a better experience. Right. And the better experience was still having a better screen or a bigger screen or a curved screen or whatever that experience would be. Right. And so glasses remained inferior. And I think we're hitting this point, but not quite yet, where glasses are becoming superior, right? And when glasses become superior, the shift will happen, but it won't happen because the regular person is going to go, we think, say, oh, you know what? I want to have this glasses. It's really cool. It's usually the early adopter, right? Yeah, and it's the classic kind of adoption curve, right? Where you have essentially the innovators, they buy anything that's new, right? And that's kind of the phase that's being powered right now. But when the early adopters go in and say, hey, hold on a second, this is kind of really cool, and I can use this, right? And then their social network that they sort of proclaim it to, say, hey, this is practical and useful, and then applications build. So what we really need to get to is around 150 to 200 million people who actually use these glasses on a regular basis to actually make this an industry that becomes much more sustainable in a way that smartphone adoption or PC adoption or console adoption all ended up developing in this fashion. And I think we're going to get there. We're just not quite there yet in terms of being better than the screen, but you can see it happening. I mean, this ROG integration is sort of one example of that.
Yeah, I think this is a good move by XREAL. The other thing that it starts to bridge the gap into, of course, is the behemoth games. If you look back at how far we've been covering this has been on our channel for quite some time with you even, and that is talking about GTA 6. So what could be a stablecoin or an in-game digital asset, what might look with in terms of NFTs coming. I mean, we've been reporting on this for almost 3 years, all the way back to the mega mergers. And then you look at this situation right here where Japan has kind of gone all in. Sonium is now aligned with Japan. You have the prime minister going over there and basically saying, definitely want to double down on where crypto is going. It's like it's going to happen in 2026. What do you think the Japanese are up to around the integration of blockchain?
Well, I mean, first of all, Japan has always been looking at this as an industry of high interest. You know, the finance minister is actually pro-crypto, which is great.
Yep.
We already have basically sort of early forms of stablecoins, although not quite stablecoins in the way that we think of Tether and Circle, you know, with JPYC, but, you know, banks are getting into the game as well, right? You know, Japan has been pushing, you know, really for a while now, this sort of vision of new form of capitalism. And really what this new form of capitalism vision has been about is how do we basically sort of make Japan grow again? Because for people who might not understand the economic circumstance of Japan, it's kind of been struggling. And it's struggling not because it isn't a sort of, you know, powerhouse in its own way in some form or fashion. It's got a demographic problem, a really big demographic problem, in the sense that I think the prediction is that over the next sort of 20 years or so, you know, Japan will depopulate by almost a third because it doesn't have essentially the same kind of immigration structure as other nations has, which is, by the way, also one of the reasons why Japan is so fascinated with robotics, right? And one of the things you'll notice, for those of you who visit Japan, there's actually, you know, pet stores everywhere, okay, right?
Yeah.
And that's because people are having more pets than they're having children. So it's just kind of one of those sort of interesting sort of, I guess, social demographic situations. And the other problem that Japan had also is that essentially domestically zero inflation because of the fiscal monetary policy. I mean, Japan is really the granddaddy, really, if you think about it, the granddaddy of, you know, QE. You can essentially, up until recently, you could essentially buy goods for pretty much the same price that you could 20 to 30 years ago. Think about that. I mean, that's insane.
Crazy.
Of course, the Japanese yen would devalue externally, but within Japan, it'd be subsidized. And so when you go to the countryside, I think just as little as a year and a half ago, you could probably buy a soft drink for the same price that you could 20 or 30 years ago. And what that's done is it's created a nation that I wouldn't say is complacent. They're not complacent, they're hardworking. But when it comes to money, essentially didn't understand what was happening in the rest of the world because the pressure wasn't there. And, you know, wage inflation, for instance, was only introduced like a couple of years ago, right? You know, and the whole sort of, you know, Japan carry trade unwinding is a result of Japan coming out and saying, you know what, this is not sustainable for us anymore. We need to change our model. We need to basically start essentially sort of, you know, reintegrating with the capitalist system in the world, start charging actually some interest and increasing that cost. Because the Japan carry trade was a multi-trillion-dollar basically trade that in many ways affected things like the price of Bitcoin even, you know, from risk asset standpoint, people basically sort of lost their cheap source of funding, which is basically subsidized by Japan, right? So it was a big impact around that. So it's not to be viewed only as what happens to Japan, but actually it affects entire funding models as a result of this, because Japan is going to inch closer and closer and eventually get to a point where it'll match interest rates that they have in the rest of the world over time. And that means that they have to grow essentially the economies, and they have to innovate and they have to invest. And of course, crypto is one of those areas of sort of big investment focus and growth potential that Japan does not want to miss out on. And so they've been quite forward around this, and, you know, with regulations and changes. So it's generally very positive. But I would say Japan's problem is sort of macro in that construct. And so they're trying all these tools to essentially sort of, you know, bring Japan out of its sort of growth stagnation, as it were. You know, one of the reasons why Honda is talking about crypto, you know, essentially in a public forum, is because the Japanese government is like, you know, pro blockchain. And guess what? The U.S. government is also pro-blockchain, right? Actually, what we believe is that once the Clarity Act finally passes Congress, which we do believe will happen this year, right? Then basically every other company out there can finally openly talk about tokenization and blockchain and integration of crypto technology, because it's not just about a stable coin, right? They've got a framework that they can do so that wouldn't be considered a security. So I think that's basically going to happen in an accelerated fashion. And while Japan has a lot of influence, US has much more influence, right? And so I actually think the path to mass adoption and mass growth in this area, particularly when it comes to broad tokenization, not just RWAs, but altcoins and everything, is going to basically sort of drive that for 2026, which basically makes us very bullish overall for the year. Sort of the thematic that we think of 2026 or 25, really, the history is it's deferral, shall we say, right? So things that happened in 25 are now happening in 26. So that's our perspective. So we do think, I know there's some people who disagree on this one, but we do think that 26 will actually be a very good year for crypto, because things like what's going to happen in the midterms have already been broadly baked in. Institutional interest and adoption remains fairly strong, right? The fact that gold and silver have accelerated up is actually, we think, a good signal, because essentially, people cycle out capital for faster and better growth opportunities. Right, the MicroStrategies of the world aren't going to stop buying Bitcoin, right? And I know a lot of people talk about the 4-year cycle. We're not believers in it. Let's call it Bitcoin religion. And however, what's happened is that the people who own the Bitcoin, which are all the sort of Bitcoin OGs, they believe in it, right? And so it's not math that is making the 4-year cycle work. It's the people who own it, who've been doing this tradition for the last, basically decade plus, right, are saying, we believe in this and we believe in this. That's why I call it like religion. But as more institutions are adopting it, as more people are buying it basically as a store of value, that cycle will slowly diminish. And I think we're hitting the beginnings of that as we move much more institutional. And I do think institutional adoption is going to be big.
I want to play a clip for you that is a recap from what the Japanese have been doing, along with, in general, kind of some of the things we've been following for quite some time, and how all of this is coming to a head right now. Let's go to that clip.
So basically, Shuju Itsumi, he became Sega's new president and COO back in 2019.
In May of 2021, Sega revealed during one of their financial presentations that they are working on the creation of a super game that will be released by the end of March of 2026. They will have elements of the metaverse. They seem to be a collection of games that interact with one another and aren't just single-player games.
So it's not only games, but also community, user-generated contents.
And they're all going to have a lot of funding into them.
$882 million ain't no chump change, and this project might even include acquiring other game companies.
It's a bit more of a dipping your toes into the Web3 tech.
Yeah, something like
sometime in 2026.
Right.
Is that correct?
Could be, yes.
Sega wants to be basically the rock and roll of gaming, while their rival Nintendo thrives in being the pop music of gaming.
We're trying to be wild. It's higher risk, but potentially higher return.
He worked at Sega for a bit on iconic games like Sonic Adventure and Jet Set Radio, then went away to help launch the PlayStation in the US and worked on major titles like Crash Bandicoot, and also went to Disney to help with Kingdom Hearts.
I think I want to say this is going to be my greatest achievement in my career.
Bold words. Bold words.
All right, so you saw kind of a good lineup there for Sega and this strategy that they've been implementing for some time. What blockchain would Sega use? Do you think it'd be an ETH layer 2 like Sonium? What do you think would happen?
I think in terms of what blockchain they're going to use, I think one of the things that has been interesting on the experience with Sony on Soneum is that they've discovered essentially that when you are an L2 or an L3 or whatever structure you want to be, ultimately you don't have censorship resistance, which is the benefit of blockchain, but perhaps the struggle for IP protection. If you're looking at it as a transaction layer, purely as a transaction layer, an L2 and L3 and EVM layer does make sense. But I think there is a trend where people are thinking about how do I basically, especially in Japan, more so than other countries, are thinking about how do you manage this in a way where you can have certain kind of censorship protection, right? And so basically they might be looking at essentially sort of, L1s as well. And again, it depends on how sophisticated you're thinking about it. But the Soneum sort of launch has revealed some interesting flaws. And I wouldn't say it's flaws per se, because that's the whole point about essentially, permissionless technology. But, when you look at the institutional direction, there's a difference here, right? When, on one hand, you have sort of privacy, Monero, Zcash, that type of stuff, right? And, Bitcoin. But then you have the other thing. Where's the Bitcoin being held? Well, the Bitcoin is now being held by institutions. It's sitting in BlackRock, who basically hold your keys, so to speak, right? So we're in this sort of interesting scenario in this debate where really sort of at the meta level, it's around, basically sort of having essentially sort of sovereignty over the asset and the censorship-resistant nature, or do you essentially give it to the institution and trust the institution to handle it for you and sort of quasi-police it on your behalf, right? Which is kind of against what the original vision of crypto was, but the world is moving towards it. And I think it's inevitable at this point if you want to integrate crypto there. So the takeover of essentially crypto going into the institution is looking quite different, as always was the case, right? So I think the right approach for them would probably to think about it as a platform, as an L1, right? And I know a lot of people talk about app chains, and I think of those as a kind of new type of app chain, but it would operate as an L1 because they need more control over it versus basically an L2, which of course is fine, but maybe for next level companies would be sufficient.
It's presenting problems that we all know have existed. I think the real question is, how do major companies who are trying to protect certain things, certain privacy elements that do play into this, are going to decide on how to move forward? So it's a big one. What about with, in general, if you look at just Sony's position in Japan, could they be positioning Japan as maybe the world's largest casino, I guess, in essence, because you're talking about gaming now that would be for potentially value. What do you think about that?
Okay, so a couple of things. In Japan, I mean, obviously there is a gambling-like culture with pachinko machines and so on. However, this is a regulated activity. And that is, by the way, the reason why in Japan, NFTs and tokens inside games, the whole play-to-earn construct, and Korea is similar, is actually not permitted, considered in the same vein as gambling. So if you essentially play-to-earn, you'll notice, so Japanese game companies that are doing play-to-earn don't offer the service in Japan. And that's because right now it's within under that regime. Interesting enough, but that's because they've had to grapple with that for quite some time because of the advancement that they've had. Like Japan, for instance, has rules and regulations around loot boxes. Most countries do not. Okay. Because they've essentially had to deal with this much earlier on, because literally back in the earliest of days, basically, kids would spend, and adults as well, would spend ungodly amounts of money to get the virtual items that they wanted because they considered them valuable, of course, right? The government had to ask Square Enix to release Final Fantasy not on a school day and not during school hours. Otherwise, everyone would get, right? But the point is that culture was so deeply embedded with that gaming culture that they understood it so well that they had to basically be more advanced in those rules and regulations than other places, right? However, having said that, that doesn't mean that blockchain technology won't be used inside these games and can't be used in this manner. It will. It's just a matter of evolving, because there is a tension. The government is being lobbied around, hey, you know what? Play to earn in this format should not be considered essentially sort of gambling in the same way that loot boxes isn't considered gambling if it is in a certain form and structure. And I think we'll see this kind of iteration happening in other places around the world. But of course, the excitement in Japan, back in the early days already, around sort of NFTs and the technology of having digital ownership, true digital ownership of your gaming items, was very, very strong because it was so valuable to them already intrinsically, right? So I think Japan, Korea, I mean, I said this on your show earlier, Asia tends to lead in this category anyway. Most people in the Japanese and Korean government today will have probably played video games and may continue to do so in some form or fashion, or at least have, right? This is not true for other countries necessarily, right? And that's why the understanding doesn't exist there, right? And so therefore, you have much more of that empathy and understanding and say, I get this, right? Or I see my grandchildren do it, or I see my children do it, right? And I'm engaged with this. And of course, the importance of the gaming industry for both places like Korea and Japan, and of course, China, is significant, right? Whereas, the gaming companies in America or in Europe, they may be big, but they don't have the same clout, right? Exactly. They just don't have the same kind of impact. And it's been taken over by other things, because in America, I would argue the area of attention that's been much more pronounced is social media. So
sure.
the gaming competition in America and the West is more TikTok than it is another game studio, right?
Yeah, for sure. Let's talk about Pokemon, because there's some things going on right now. The Pokemon 30th anniversary, this is getting ready to happen on February 27th. So again, timing here around all of this, and let's not forget, I'm going to go to the Poly Market, and I'll just share this with you guys as well. This is Logan Paul's Pikachu Illustrator, which is like a one of, and the potential for it to sell right now on Poly Market is a plus 4 mil. But there's a couple of people that are down here in the 15 mil range. What do you think about how Pokemon could shift the narrative here, especially from a standpoint of maybe becoming mainstream again as a digital collectible? What do you think?
So, I mean, right now, when you think about sort of Pokemon cards themselves, they're already trading quite actively, essentially on chain. So that's obviously one of the big, let's call it NFT embeds. It's kind of like an NFT RWA, actually. It's kind of interesting. And again, I see this, as a great example of, the people who are trading it, aren't thinking about blockchain or the fact that it's an NFT. They just want the Pokemon card. And similarly to the, you just showed Poly Market. I mean, how many people who are using Poly Market necessarily even care about what blockchain technology sits in the back? Which is unfortunately somewhat represented also in the price of Polygon, because people don't care about Polygon. They only care about basically, basically the prediction market. I think today, Pokemon cards already are established sort of assets. So it's kind of transcended that sort of area where whether it's 1 million, 500,000, 2 million, 9 million, who knows, right? Like whatever value is being sold at, it may be a headline, but within that community and essentially the network of that community, they all recognize that Pokemon cards have some kind of value, right? We're still fairly early in this idea. But I think, NFTs today still trade $300 to $400 million a day. And people aren't really thinking about it because it's sort of outside of like sort of the hype cycle. But that industry hasn't gone away. It's there. Sometimes these things come in surprising ways where before you know it, we're all going to be trading digital collectibles and owning them. And we won't even think of them as NFTs per se.
Exactly.
And exactly. That's right.
Well, and that's the whole point, is maybe Pokemon is the gateway that helps that become a thing. If people start realizing, oh, wait a minute, I can start trading my watches, my Maris cards, all those kind of things that potentially have that kind of value that can be tokenized for sure. RWA definitely going to be on the top list. Speaking of that, RWAs along with these IPOs, including one that you're in, these are the blockbuster crypto IPOs that we're watching right now for 2026, some of which you guys will recognize: Kraken there, Consensus, BitGo.
We're investors in Kraken and Consensus, by the way.
There you go. And then there's Animoca Brands. So my question to you is when?
So we've been telling people that, basically sort of 9 to 12 months. So the expectation would be towards the end of the year. We announced essentially the reverse merger with Currency Group. I know you've been talking about we should be listing in the US. Well, here we go. We are listing in the US.
There we go.
We've been working on this. We just weren't able to talk about it more publicly. It's also how do we give access essentially to people in what we believe is sort of the master thesis of Animoca Brands, which is that essentially altcoins is going to collectively outperform Bitcoin in a significant manner. We made this prediction based on the comparison of gold and the stock market. And stock market today is roughly 6 or 7 times the value of gold. And when you add the private market, it's about 10 times the value of gold. And that is not to say that gold, like Bitcoin, won't ever be the most valuable single, in this case, crypto or asset in its format. However, when you add them all together, it's going to be basically the people, the assets that you use, the industries, the products. Those are going to be the ones that basically collectively are larger. And Animoca Brands basically wants to be essentially the gateway for investors as well as consumers for that. And so being public in the US, we think makes a lot of sense.
I wanted to get this answered from you. I'm going to share my screen here on the Currency Group. So this, of course, was the current market cap with the reverse split included. And I highlighted this right here. Do you think that's real, or is that maybe
No,
just not
so the way you calculate this is the merger ratio is 95.5. What that means is that we dilute Currency shareholders essentially by 95%. Also, the market cap of current, and again, the merger isn't complete yet, so this is not financial advice, just to be very clear, right? However, what some investors have been doing is that they've been looking at that and multiplying it by 20 as a way to get an indicative market value. That's what they've been doing, because essentially that would be the full market value in terms of the issued shares. So that's how some investors are calculating this. And of course, the price will reflect, I would say, much more reality as you get closer to that moment in time, right? But the nice thing is that on the day of the announcement, I think the circuit breaker went off 26 times. The share price spiked. If you look at the sort of the movement, and that to me essentially is indicative of the fact that people are excited about sort of basically what we're doing about crypto. And of course, now there's of course a period of waiting when it happens. But yes, that's we're really excited about it. And Currency is actually also a company that actually services millions of consumers in places like Philippines and Indonesia and Malaysia, all of them who could be crypto enabled, because essentially they're essentially a payment provider for them.
This is obviously going to be big news here in the U.S. when Animoca goes live, because it will be, I feel like, one of the true first Web3 native companies to go on the stock exchange. So that in itself, I think, is going to be rewarded by typical Wall Street investors that understand where this space is going. And there's a lot of them they're coming on our show. They're starting to understand where this is going. So I anticipate you're going to see some big movement for sure. Where do you guys have the most exposure? Is it China or Japan right now?
So we don't have any, as Animoca, I mean, between those two countries is definitely Japan, but generally Asia Pacific. So to be clear, we don't have exposure to China directly, because China doesn't have anything in crypto per se. But Hong Kong and Taiwan are markets where crypto is sort of, obviously permitted, and we have a lot of exposure there. And of course, the other thing is that the whole region, Asia Pacific, is actually our biggest region overall, which also adds to the other element that Animoca Brands, is not just sort of giving you exposure to altcoins, which of course is a big area. It's 30% of the market, right? But it's also gives you exposure to the Asia potential, which no public company currently services as well, right? So there's a lot more, and the largest number of crypto owners and users is in Asia, right? So all of that, basically, I think to your point, we're hopeful certainly that this should be sort of well accepted, and that people like what they see once we finally go public.
Speaking of altcoins, and going back to that question, do you think that Wall Street is going to reward the utility tokens? Because I've got analysts on here that are kind of pointing that direction, and you got people that are pointing the other direction, saying, no, it's going to be more of this, kind of blue sky and fluff. Your thoughts?
Our general thought is going to be utility tokens. And that is not to say that you can't start off being a meme coin and then bring in utility, right? And sort of, developing games or having applications that are sitting on top of essentially different types of meme coins, right? Because it's a community construct, right? And communities are addressable. However, when you think about, take away Bitcoin as a store of value, right? Effectively, you can think of Ethereum or Solana or BNB, which are, of course, the other set of the majors, effectively as utility tokens. And these utility tokens have a very specific purpose around essentially the network. My mental model is that they're kind of like the telcos and ISPs back in the early days of the internet, right? They're very valuable and important companies. But ultimately, the companies that are building on top of this infrastructure are going to eclipse them, because they're the ones that own the customer. And we've seen this playbook before. Back in the day, it was AOL, and it was, PSINet and all the ISPs, right? The last mile, as they would call it. And guess what? The largest companies are the ones who used those telco companies to grow. And, AT&T is worth hundreds of billions of dollars. So it's no joke. But Apple, Facebook, Google, and all those guys are worth literally trillions. So, so there, right? Remember when Amazon first went out back in I think it was 97 or 98, right? And Yahoo was public. And then you had Google a little later and Facebook later. Like, imagine if you owned these companies back in 2000, 2001 or something like that, right? Well, here's my point, right? Which is that if you're a fund, you would have to basically sell and liquidate the fund within 10, maybe 12 years. And that'd be great. You would have made a lot of money between 2000 and 2012 and 13. However, the real growth happened afterwards, right? And you would have missed out literally the growth from where they were worth 100 billion to literally trillions, right? And so how do you participate in that, as a fund? And that's basically why we think being a public company just makes so much sense. Because if you don't believe in it, you can trade out. But if you do believe in it, that's your index. You can really sort of have a way in which you can have this parallel growth over the long and longer term, right? And because it's a token, there's lots of ways of hedging and growth and management around this, right? And as you as an investor, imagine if you're in 2001 or even 2002, 2003, how would you know the difference between sort of an eBay, an Amazon, a Yahoo, a Google, or Facebook, or myriad of others? It's hard, right? Right. Yeah. And there's nobody else offering this. And so we think Animoca is basically the way to do that. And of course, gaming remains a really big thesis point to us. But of course, everything else with what we're doing on the institutional side, RWAs, Nuva, and so forth.
Yeah. Well, and you guys have your ear to the ground like no other company out there. So understanding this market, especially in these early stages.
And regular Joes are not going to have the ability to buy into A16Z. Despite the fact that they're incredibly successful. It's a privilege to get to invest in a fund like that, right? But Animoca wants to be different. We want to be essentially the everyman's fund and everyone's access.
I like it.
If you're right, like it's and that's the vision we think of crypto as well, as democratization of access, of financial access, right? So it would be kind of sort of ironic for us and sort of hypocritical if you said only the big wealth clients can
only
basically be
guys
investors in this.
Yeah,
exactly. It should be for everyone, and that's exactly why we also want to go public. Yeah.
Two last questions to you. Any surprise trends right now that you see coming for 26?
Well, I wouldn't call it a surprise for us, but I think it's going to be a surprise for a lot of people because, as you know, last year, towards the end of the year and to start of the year, everyone's basically, for lack of a word, shitting on gaming. Right? Everyone's saying gaming is bad, it's underperforming and all that kind of stuff. And I want to point out that I think we've seen a lot of people have looked at the lens of gaming slightly wrong. That is to say that gaming is really, really critically important for on-chain dynamics. But I think we also have to extend the fact that essentially gaming has taken over crypto in a slightly different way as well, which is that when we say the word GameFi, what we should also consider is gamified finance. And so Gen Z and sort of, Gen Alpha, that generation, when they think about basically trading and money and income, they want to have that experience to be in their culture, which is gamification and some things that are gamified, which is why you have leaderboards and social rankings and so forth, right?
Yeah.
The second thing I wanted to sort of point out that I actually think, there's going to be, precisely because assets like sort of, GameFi and Web3 gaming have been sort of overlooked and people are dismissing them. That's exactly why we think they become outsized opportunities, right? If everyone's only focused, sort of on sort of, the hot topics, like AI or so on, it's going to be not just more competitive, but actually a lot of them are a little bit more overvalued. An example recently from our stable has been AnyChess, a small little project, but partnership with, chess.com and brand ambassadors like Magnus Carlsen, who just recently won another championship, right? And what's amazing about AnyChess is that the token, which really, was a very small token, has risen essentially 700% over the last couple of weeks. But its market cap, its fully diluted value, is only around $70 to $80 million, which is okay, right? Yeah. When you are an institutional investor, you have to be able to value it. That's the thing, right? You can't go to an institutional investor and say, this token is fluffy and looks nice and has a really cool name. It just doesn't work, right? You have to have some measure in which you can value and measure it. And that's basically why we think utility tokens are going to sort of be much more prevalent and important, and why I think things like meme coins are leaning towards utility. And here's one other thing. Projects and companies basically had to go the meme direction because Gary Gensler would hit them over the head the moment they said, oh, there's some value and this is why it's precious and this is why there's usage. And, they say, oh, investment product. You have to basically register. And if not, and all that kind of stuff, right? And now basically with clarity coming out, that's going to be much, much more clearer. And as a result, I think we're going to have much more openness around companies saying, here's how our value creation is possible. And here's why you should buy it, because it's a good product. But there's examples like that are coming to the fore. And as I think altcoin season is going to be upon us. However, it's not going to be for every token, right? It's going to be for the ones that have institutional backing.
There you go, man. You and I are on the same page on that one. I agree with you there. You look at, okay, one more question to you, and that is, we follow the DAT side of things, and there has been a recent, I won't say partnership, but definitely introduction. This was done by Kathy Wood. I'll bring up the tweet. This was done by Kathy Wood not too long ago, and this, of course, is Quantum Solutions and Tom Lee. What do you think's going on here? Do you think... because he's kind of hinted mergers, acquisitions in his recent board. You think we're going to see something like that?
Absolutely. So no question, that's going to be consolidated. If you want to buy Ethereum or Bitcoin at a discount, look at that. Seriously, right? Now what happens to them as a business is a different thing, because it's not like an ETF. So it's not like you can buy the stock and redeem the asset. However, that makes it attractive from an M&A standpoint. If you want to go and say, hey, you know what? I want to buy Bitcoin at 20% discount into my balance sheet. Why not just take over a company that has that Bitcoin, right? As an example, right? So that's happening. But the second one, in defense for those who want to basically be operating businesses, because many of those DATs are like, you know what, this is too hard. I don't want to run a business this way. So that's one category. But there's another category of companies that actually want you to build stuff. And, we had a similar basically partnership of sorts. It hasn't completed yet, but we had announced, for instance, a deal with AlphaTon, right? And AlphaTon is a ton DAT, right? And what we did was we sold the controlling stake of Gamey to them. Now, it hasn't completed yet, but essentially Gamey is a Telegram application, so it makes sense, right? You got the Ton ecosystem. We basically gave them essentially, we'll give them control upon completion, of the Gamey asset, which is a Telegram ecosystem play, that drives revenues, and basically has its own token. And so when you integrate those two, suddenly you are more than just a DAT, but you're essentially an operating business that essentially is in the area of gaming. And I would argue upon completion, that basically makes Gamey the very first publicly listed Web3 gaming company. And AlphaTon is a small company, just to be clear. Right? However, there you go, right? You've got the small market cap, right? But it basically has assets, and Animoca as a result becomes a significant shareholder of that entity because of that transaction. So and I expect this type of stuff to happen more and more across different ecosystems, not just ours. So I totally agree with you. We've been basically sort of in that trend already for really the latter half of last year anyway.
There's going to be some big moves, so get ready, guys. Watch closely, especially as these treasuries start to move. I think, especially the Ethereum treasuries, which are going to be amazing. So, Yat Siu, it's always fun to kind of get in here and get inside your mind. We love it. Thank you so much for coming in today. We appreciate it.
Thank you for having me, and Happy New Year again. And 2026, we believe, will be a good one. So hang in there.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.